if there's anyone
It's
here.
not the worst thing in the world. Speaking of the GABA a couple of weeks ago, Ben, that was pretty top notch.
Did you get somewhere you're not supposed to be?
No, we didn't. You met a couple of players though, didn't you?
Yeah, met Richie. Bumped into Jared Berry in the cubicle. In the urinal.
Nice.
big sauce, big merit. That was pretty cool.
A couple of the old star words of the club getting around, which is it's always good.
There's a few old bones running around there.
Yeah. I actually ended up meeting. I mentioned Conor McKenna.
Yep.
I actually ended up meeting him for a Guinness after that across the road. Believe it or not.
I remember you telling me that. Yeah, I was like, I probably should have stayed there. Where we went was pretty abysmal. So.
Yeah. No, that's how it is, mate. Nights out. Good to get the win for the Lions that night, though.
It was good. It was very good. Could have been a pretty quiet night if the Pies got up. We're looking good though, boys. I don't know if you watched the North game last week. First quarter was a bit scratchy, but second half was phenomenal.
Yeah, no, they were good, and starting to kick some goals as well, which is good. Pav doesn't care.
No, I'm tuned out.
Pav's tuned out. He's done. He's like, nah.
Are you NRL, Pav? Are you any sports?
I'm NRL, North Queensland, so you kind of have to. You're born with the ball in your hands.
Yeah.
Actually, I'd lie. It's actually more people play AFL up there than.
Yeah, it probably is.
It's crazy.
Yeah, it changes.
Yeah.
What are you thinking about? Yeah, I guess we were chatting earlier about the market. We've seen a bit of a pullback overnight.
Bit of a flush.
Not surprising, I don't think. What are you seeing yourself, Ben, from your side, and with your team?
Yeah, it's healthy, boys. To be honest,
Same.
We're running. We've run very hot the last 3 months. Markets need a time to, refresh and flush out those weak hands. It's not healthy for a market just to run, 100% every quarter. So, this is very healthy. It's normal. We sort of expect this, and it might chop around and maybe track a little bit sideways for the next few weeks, and that's not a bad thing. It's actually a decent thing. If you run too fast, you can sort of overextend the market. So, nothing to be worried about.
What's the caveat to it, right? Like we're close to 100% up, but we've had a 5% pullback, and everyone's calling for the end of the world.
Yeah, that's right. I thought it was interesting, kind of post like successful Ethereum upgrade.
Yeah.
Like obviously everything was running hot. The altcoins were running hot. Obviously ETH got its pump.
If we look back, like, even a month ago, right? Like if we're sitting back at sort of, let's say 20th of March, you're looking at $1,700 ETH, right? So we're sitting about 2,000.
Yeah.
You go back 3 months back to the start of the year, and Ethereum was 1,500, right? So we're just tracking up, month by month. You had these pullbacks, but that's to be expected. You're not just going to go up and to the right the whole time.
Yeah, it definitely seems to be tracking a lot more healthy. I think this is probably what we want, right? We want this type of...
It was the largest liquidation, I think, in at least last 1 or 2 months. So definitely, like Ben said, I think weekends getting shifted out. Coming in, trying to ride the coattails. Just getting hurt.
Yeah, 100%. 100%, boys. And look, I think we'll probably talk about it a little bit tonight, but like crypto runs in 4-year cycles, right? And we always say in crypto there's no gentleman's entry, right? There's never a good time there's never a good time to sell, or feels as though there's never a good time to sell, and it's never a good time to buy either. Crypto will chew you up and spit you out if you don't have the strategy right. You're not careful, which is the topic of conversation tonight.
Yeah, how fitting.
Yeah.
Look at that. That was beautiful.
I posted earlier on today on LinkedIn and Twitter. I was like, it's almost perfect timing to do a show like this tonight and cover these kind of strategies. And I think there's probably a lot of people that will join tonight that will be, we want to, I guess, help them try and avoid some of these mistakes that, like I said, we've met as well. So
I'm guessing most people will be like me. I bought the 2018 top. 2017 top. I'm sure a lot of people got stung in 2022, 2021 buying that top as well. So interesting.
Yeah, once you're not just lumping on FOMO for Pepe at the moment, mate. That's what we all need to be
all
careful.
My Twitter comments is just filled with Pepe. Like,
literally the war of the memes. Dogs are up for they're going at them.
Dogs versus frogs. It's very, very interesting. It's anyway. What can you do? That's the market we're in.
Yeah.
And what about the SEC recently, boys? Gary Gensler yesterday getting absolutely grilled.
They should make a barbecue after him, I reckon.
Yeah.
Put him in a hot dog and some bit of ketchup.
Yeah. I haven't seen all of it, but I watched a decent chunk of it today, and he was grasping at straws for a lot of his answers, and I mean, I just don't think there's a reasonable defense for a lot of what has happened under his watch over the last number of years, 2 or 3 years at least. And the whole FTX saga and everything they talk about with Coinbase and Kraken as well. It's super interesting, and it's definitely one that I think we'll continue to cover for years to come.
Yeah, he's definitely got a bit of a hit out on the crypto industry. Some of those questions was pretty simple to answer, and it was just very it was navigating around pretty much every question, right? Like he's gone after, I think, 50 companies in his time in office and hasn't created one new rule about digital assets.
That's the call to action, right?
Yeah.
Interesting to watch, but see how it all goes.
Cool. Will we kick it off, Ben?
Do you want to get started, gents? Fantastic. We took over one past. Thanks everyone Let's get into it. Thanks everyone for tuning in. I do need to just have a little disclaimer before we kick things off. So this webinar is for entertainment purposes only. The information presented is not advice and does not take into account your personal situation. So if you're looking to get advice, seek out help of a licensed financial advisor. And I'm missing out at the bottom of the disclaimer here. Sorry, I wasn't sure if you got the rest there. So it's actually cut off on my screen.
We're good. That's
you should consider risks associated with investing in cryptocurrencies, and we do not recommend any particular asset or investment strategy. Rightio. Now we've got the housekeeping out of the way. Thanks everyone for tuning in, whether you be on Facebook or YouTube or wherever you are. LinkedIn, I think we're LinkedIn live as well, gents. So fantastic to have you everyone on. We're going to be doing some questions at the end as well. So if you've got some questions, please hold them as we get into them, and we'll try and get around to as many as possible. We can throw them in the comments on YouTube or Facebook. I always like to start off with a little story though, before we do introductions. And my story sort of starts at the Formula One a couple of weekends ago. Gents, I was first time ever at the Formula Ones. No idea about race cars. Not a race car fan. No idea what was going on. I just got free tickets. So went down. It was the most incredible experience. If you've ever been to the Formula One, it is full on. I went to the qualifying round. So it wasn't the actual race. This is the day before we sort of finding out the positions on the pole. And in the qualifying round, there's basically like this elimination race. And every 5 or 10 minutes, if you're in the bottom half of the pack, you basically get eliminated. And I had no idea what was going on. I was like, what's going, is this the race? I didn't even know it was the qualifying round. I thought it was a race. I'm like, why are people getting eliminated? And there was like one of my mates next to me. I went up to him and I was like, mate, what's going on? And he basically told me it was the race too. And I was like, oh, okay, we're in the race. Well, why is everyone getting eliminated? And I was watching there just being so confused as to what was going on. And obviously my mate had no idea what was going either, but we've all got that mate that likes to be the expert, everything, and was feeding me sort of misinformation. I had no idea what was going on. Then comes old mate who rolls in with the full Mercedes kit. He had the hat, he had the jacket, the drink bottle, the glass, he had it all. I was like, right, this guy knows what's going on. Went up to him and was explaining this qualifying around, and this is how it works, the elimination, and basically explained how the race works, how it rolls in tomorrow. He gave me the whole weekend, in sort of a couple of minutes. And it all made sense to me, right? And this was the reason I tell this story is because it's so similar to when I first got into crypto. The advice that I was getting, the people I was going to see and talk to, were just sending me down the wrong path, and had no idea basically what was going on. I was buying the wrong things. I was getting bad advice, and basically like it was just a bit of a disaster for the first few months. Yeah, right. And the reason I tell this story is because by being able to actually talk to someone or a group of people that know what they're talking about, that have the experience, that can give you what you need and answer all your questions, can get you from 0 to 1 so much faster and allow you to avoid all those mistakes by following poor advice. And tonight I'm really excited to sort of get into this presentation, because you're going to hear from Pav, Tommy, and myself, who have been through, a range of different things in crypto, and we're going to be able to sort of share some experiences and dig into a lot of the stuff tonight. So if we could move to the next slide. Fantastic. So we're going to go really as I said, cryptocurrency, is littered with a lot of poor information. So you'll notice whenever if you're new to crypto, right, you're going to YouTube, you go to your friends, there's a lot of information online. There's a lot of people putting out a lot of content, but it's important to understand where that's content's coming from and the incentives behind some of the content. So as we've seen in the last sort of few months and last year, there's been a number of exchanges that have gone under. There's a lot of influencers that have been sued for doing different things. There's a lot of nefarious activity. So it's important you're sort of getting your information from a trusted source. And again, that's why Swyftx and Collective Shift, our companies sort of come together to put together some really sort of quality information for you tonight.
I was going to just chime in, Ben, there, say like I myself was kind of through the first, if you want to call it, mini cycle in crypto, 2013, 14, bought in it the kind of local top on Bitcoin at that time was like $1,000, and it had gone from like $100 to $1,000 over that period. But even coming from that school of hard knocks, if you want to call it that, and coming into 2017, the amount of influencers and guys that were just in there shilling and pumping their own bags, and I guess the amount of noise that was available through Twitter and YouTube, but it's very easy to get sucked in regardless of what your experience level is. And, like I said, I'd been around for that previous little mini cycle and that didn't really help me. So I guess it's just something for people to be mindful of as well.
Yeah, spot on, Tommy. Move to the next slide. Fantastic. So who on earth am I? My name is Ben. I run a company called Collective Shift, and we're one of Australia's leading research platforms, and we partnered with Swyftx a couple of months ago to be able to provide more, research-backed quality insights, but we really focus on the everyday person. So I'm originally from Tasmania, just an everyday country guy, and, trying to get myself into this space 6 or 7 years ago was super confusing, and as I mentioned, just super frustrating that there wasn't a lot of great information out there. So I went completely down the rabbit hole, and I've been working in crypto education now for the last 4 or 5 years. Used to work with Nuggets News and now over at Collective Shift, been all in on crypto and learned a lot of lessons along the way. So really excited to get into some of the things tonight. Obviously, you guys probably know Pav and Tommy. So they are hosts of Swyftx's podcast, and a lot of you probably already tune into the podcast as well. So keen to get in and get their thoughts across the market tonight. Not sure if Pav and Tommy, you want to do a bit of an intro of yourselves, but I think everyone knows you're doing it by now.
Yeah, no, I was just gonna go back to like some of the just endorsements. I guess the alignment with Swyftx and Collective Shift. For me it proves due diligence reigns supreme. Doing your due diligence on the right type of people to partner with, the right type of people to, I guess, float around in your circles as well. Like it affects us so much. Ben, you cover a lot of this stuff more in like across personal development, but just running in the circles with the right type of people helps everyone grow. And I had a quick little story that I seen, an interesting story today that came out, and I said I wasn't going to say it, but Taylor Swift, she actually, she's given people a lot of lessons in due diligence. She, essentially the story is she turned down 100 million from FTX at the time they were signing up all of these, ambassadors to come on board. Yeah. And it was actually Tracy Plowman, Ben, who you'll know pretty well from Bamboo. Tracy had it on her LinkedIn today. I thought it was pretty funny, but she said that her dad is a former stockbroker at Merrill Lynch, so he obviously had taught her the ways of I guess the financial markets and securities laws potentially in a way. So good on Tata for not getting involved there. But I said I'd give Tracy and Bamboo a shout out for that one on the night.
Yeah, no, fantastic. There's some cracking companies in the space doing some amazing things, and we're very really privileged to be working with you guys over at Swyftx to promote good education and research in the space, because it's really lacking, across the world, but here in Australia as well. So, let's get into it. So there's really tonight there's going to be 3 key things that we're going to be focusing on. One is the biggest crypto investing mistake. So as I said, we've got a membership platform. I've spoken to hundreds of people on a monthly basis, and there's some really common mistakes that we tend to see investors make that we're going to share tonight and help all of the listeners avoid those. The other one is some fundamental investing strategies. So, there's a couple of real core principles that we like to focus on that allows you to enter in the market with confidence and really build up your portfolio. So we're going to be speaking about that. And then also some investing trends we're monitoring across the space. So we're going to be digging into those 3 things tonight. As I mentioned at the start, guys, if you have any questions throughout the live, feel free to whack them in the comments, and we'll get them at the end. And the biggest thing, as I mentioned at the start, you're going to hear a lot of different noise within crypto. There's a little range of different people saying different things, from Warren Buffett saying that it's rat poison squared, right, to Michael Saylor buying 140,000 Bitcoin for his publicly listed company, right? There's a range of different opinions, so it's important to listen to different people. We obviously tonight are very pro crypto, so we're going to be talking about obviously a lot of the good things about it. We'll talk about some of the negatives and the risks, but I'll start with cryptocurrency and why cryptocurrency. So if you're really new to the space, cryptocurrency is basically just a peer-to-peer network. It's a way to transfer information across borders without the need of a middle person. Now, that could be money, it could be data, it could be music, it could be anything. Primarily, it's used for finance or money. That's where Bitcoin was created. And to do this, it's used on, or most cryptocurrencies are built on a blockchain. And a blockchain allows us to communicate information without the need of that middle person by using the blockchain. And a blockchain is basically just another piece of software or another piece of code where we can record transactions in a decentralized way. So if Pav, Tommy, and I are all using the same blockchain, we all have a copy of that data. There's not one person or individual. So just like a bank would have all the records of, deposits of someone's bank account, if the bank goes down, well, then everyone's accounts goes down because that's where all the information's stored. Where a blockchain, every single person in the network has a copy of the data and information. So if one person goes down, every single other person in the network has a copy, and that's the most that's the beauty of a blockchain. The main type of cryptocurrency, as I mentioned, is Bitcoin. So Bitcoin is what's called a currency token. There's two main types of tokens out there. There's currency tokens and utility tokens. Bitcoin is just another form of currency. So we've got the Australian dollar, the US dollar, Chinese yuan. Bitcoin is just another type of currency, only digital. Now, Bitcoin has a range of different use cases. One is a payment system, so I can use Bitcoin to pay for goods and services. I was in Brisbane a couple of weeks ago at the crypto cafe, and I was able to use my Bitcoin to buy a coffee. Or it can be used as a store of value, and the store of value is the more common use case in first world countries. And the reason because of that is it's a limited supply. There's only 21 million Bitcoin ever created. Right now, there's about 19 million Bitcoin out in circulation. And every 4 years, the amount that comes into circulation halves. So there's only about 1.52 million Bitcoin left to be created. And the amount that comes into circulation each day halves every 4 years. So what you get is this what's called deflationary system, where the opposite of that is inflation. So we think about normal currency, Australian dollar, right? If you've noticed in the world over the last few months or last couple of years, the cost of living has gone up. Mortgage payments are higher, rent is higher, supermarket is higher, right? Going to the doctor, your kids' tuition fee, not tuition, your kids' education fees are higher. This is cost of living. And at a simple level, it's caused by inflation. How is inflation created? At a simple level, it's due to the amount of new supply of money that's put into the system. And over the last 2 or 3 years, there's been a huge increase of money injected into the system, new supply, because of COVID and to boost the economy. And when you put in more money, you get inflation. And that's why the cost of living goes up. So by holding cash, what happens is the ability to purchase things with that cash decreases. And that's where you get inflation. So the reason why so many people are looking at Bitcoin, and for example, Michael Saylor as a CEO of a publicly listed company has acquired over 140,000 Bitcoin for his company, $4.1 billion of Bitcoin, because he was holding a lot of cash, and he knows by holding cash he's losing that purchasing power. So he's moved it into Bitcoin as a way to hedge against that inflation.
I think, Ben, I was just gonna say that I think we've all kind of seen the effects play out firsthand of money printing and excessive money printing. I actually seen an interesting stat around COVID and all the money that was printed. I think it was 40% of the total supply of US dollar was printed, in 1 year or something like that. And I think that's actually expanded between 2020 and kind of where we're at today. One of the stats that I saw, I thought was really interesting, was as of March 2021, COVID had costed 5.2 trillion, and the cost of World War II in today's dollars was 4.7 trillion. So I thought it was a pretty interesting stat when you're comparing, a pandemic in the 21st century versus, World War II in terms of the costs. So I thought it was just an interesting one to throw in there, and I guess just really highlights what's happened over the last 3 or 4 years with this money printing, and we have to pay the piper eventually, and we will be doing it for a number of years.
Yeah, it just seems like one of those things that, when's it going to stop? Like, why would it stop? Like, we don't have a go back reserve system economies anymore. So yeah, that's why I guess why things like Bitcoin start to look like a bit of a sensible option.
100%. It's gone out of control. It really has. So the second type of cryptocurrency, or the second biggest anyway, is Ethereum, and the second most popular or most common type of cryptocurrency is what we call a utility token. Now, the way I look at Ethereum is like the next evolution of the App Store. So Ethereum is building a global computer where you can build businesses, games, protocols on top of Ethereum, and it does that through this thing called smart contracts. Smart contracts at a really simple level is your ability to create a contract that processes a sequence of events without the need of someone to activate that. So not that this is a blockchain smart contract, but if you think about going to a vending machine and you want to get a Powerade or a Coke out of the vending machine, you put in your dollars, you press the button that you want, the machine will understand if there's a Coke or a drink in the fridge. It'll then process your money, it'll give you the drink, give you the change, and it'll reduce the amount of inventory in the machine. And this, at a really simple level, is just like an idea of how a program could work, right? And smart contracts are at a global scale. So one of the biggest use cases for Ethereum is DeFi, or decentralized finance. Our ability to lend money and earn on our savings without the need of a bank, right? So right now, if I wanted to put money in the bank and earn a yield, or earn the savings interest on my deposit, the bank takes a large portion of that, right? So I'm probably getting 1 or 2% in the bank right now. If you've ever gone to get a loan out of the bank, especially a personal loan, you could be paying up to 15, sometimes 21%, right? That difference between what the person putting in the money and the person lending it, the bank takes that capital. So with DeFi, it takes out that middle person. So if I want to put money into a DeFi protocol to earn savings, or earn interest, the person on the other end, whatever they're paying as interest is coming directly to me. And that's the power of blockchain. It's the power of being able to remove the middle person. And that's where Ethereum has one of its best use cases, in my opinion.
I think it's probably worth calling out there, Ben. People would have heard a lot about DeFi over a number of years, and DeFi hacks and things like that. And no, we're not going to jump into that right now, but I guess it's really where it comes to the forefront is, doing your due diligence across the types of platforms you're using if you are engaging in DeFi, and I guess just really knuckling down and learning what those risks are before you do send your money or your value somewhere else.
100%. Yeah, we're not digging too deep into DeFi tonight, but yeah, great point, Tommy, that it is a more advanced space, and you do need to be very careful when you're in, playing around with any sort of decentralized protocols. Actually, crypto in general, you need to be very, very wary, right? So education is key, and hopefully we can answer some of those questions tonight. Next, we're going to talk about quickly NFTs. So NFTs have obviously had their moment in the sun probably about 12, maybe 18 months ago now. NFTs stand for non-fungible tokens, and really at a core, they're just another version of digital ownership. So it allows us access to communities or events or music. And the biggest sort of progress we saw when NFTs first launched was art, right? And the reason why art is valuable is because of why someone might want that piece of art, right? You can hang it on the wall, you can see it, you can believe it, you like the artist. But the biggest problem with a lot of the art and goods and services is that it's hard to understand its ownership, and this is where NFTs come into play. And NFTs live on the blockchain. If we can get to the next slide, gents, that would be awesome. So the next sort of iteration there is, as I said, the collectibles and memberships, and this is all recorded on the blockchain. So the blockchain is an immutable ledger. We have verifiable ownership where we can look exactly on chain and we can see who owns that NFT, and it cannot never be changed or altered. And that's where digital art really took off, and now we're seeing a range of different types of access. So the best versions of NFTs I've seen in the real world is like Reddit, for those people that use Reddit, Reddit have their collectible avatars, so you can earn points by providing information to the community and adding value. And within your avatar, you can actually, if we can go back one, you can actually earn points, and that avatar you can buy and sell outside of Reddit. So if you ever play games, you play 2K23, maybe you're playing, Call of Duty, you're earning up all these points within the game, but as soon as you turn the game off, that's it, right? You can't do anything else. With NFTs, what's happening is these collectibles, these avatars, your characters are becoming liquid. You can trade them and sell them on different marketplaces. So if you've, put a heap of time and effort into Fortnite, and now you want to leave Fortnite, and someone else down the road wants to start up Fortnite but doesn't want to start with zero, you could actually sell your Fortnite character or your account to that person down the road. And this is where we're really seeing that next evolution of ownership. Rather than you going in and giving all the information to the game, you are becoming the game. And that's the real evolution for NFTs, in my opinion. It's where I see a lot of value.
I think sorry, Pav, I know you're going to chime in.
That's all right.
I think one of the best use cases I've seen so far is like this form of digital ownership. Like I used the example in the podcast the other day of Rolex. Yep. Rolex have, I guess it's one of the most famous brands globally. Don't even think they have to advertise anywhere, that they're that well known. But they're starting to use NFT, digital proof of ownership on their watches as they're getting made. So there's an epidemic of fake Rolexes getting around. We've all been on holidays and been offered to buy cheap Rolexes and things like that. So that was one of the really digestible or types of use cases that I've seen so far for an NFT that I thought was just, well, that makes sense for the blockchain. There's a lot of use cases, a lot of businesses that even just are trying to like make a square peg fit in a round hole when it comes to blockchain. And blockchain is not for every use case, but for this particular one, I thought that was it's really futuristic, and it's thinking in the right way for the use cases for blockchain.
Yeah, and for me, I guess like NFTs have always been that thing that I never quite grasped, I think, until recently. And a big part of it has been just the use case. We haven't seen the final form, right? There's probably multiple forms, and I think that Rolex one, I know Prada are doing the same thing as well. Like that's pretty digestible. Like that makes sense. Yeah. Art kind of makes sense if you're in that space. But even like for me, like I'm a gamer. Like
nice.
Even the idea of like the fact that you could own resources in one game and sell it for a commodity in another game, which there might be an open market for now. Like it's like connecting just even like resource and time, because if the way you get paid or make money is a capture of your time and effort, like it's just that on a different plane, I guess. It's pretty cool. And I know, like, for example, not to name drop anyone, but like Illuvium, like that's a lot of what they've been working towards, like multi-layered sort of ecosystems. Like it's a pretty cool concept. But yeah, it's really cool. And like you said, multiple big brands, like you're seeing people like Starbucks, Adidas, Shopify, Formula One, they're all investing in the space. So
I think the argument that NFTs are kind of going to be a flash in the pan is not a valid one. It's
pretty fast,
It's definitely going to have its, you mentioned, Ben, it's had its day in the sun, but I think we've only seen the initial offering of what NFTs can do. It's definitely going to be a growth area in the future, in my opinion.
Totally agree. I think it's very similar to the ICO bubble we had back in 2017, where there was a lot of rush, there's a lot of cash involved, a lot of excitement, a lot of hype. Similar to the .com bubble back in the day. Like these are very similar human experiences where there's a new technology, there's a lot of money, excess capital, not much idea about where this could go, and it creates a lot of innovation, but it also causes a lot of negativity, a lot of things to go to zero. So we've seen probably 90 to 95% pullback on trading volumes and prices, but I think the underlying technology is there. And from an investment perspective, as investors, listening to this call, the way I tend to look at these is like, where can I get in on a base layer? Where's the infrastructure being built? Where are these NFTs being built on top of? So rather than trying to pick the individual collection or the individual NFT that might, perform well, where are they being built on? Is it on Ethereum? Is it on Solana? Is it, what blockchain are these NFTs being built on? Where do we think that future's going? And that's how, we like to look at, from an investment perspective, trying to capture some of that value.
Some of my favorite communities in crypto are based on NFT projects.
Same.
I just think they're the coolest people. I just feel old and slow when I see some of these communities getting around. Like they really are on the bleeding edge of innovation, and it's exciting to be around these type of people when you get the opportunity.
Next thing we're going to touch on is common investor mistakes. So these are really, like, there's a lot of common mistakes we see, but these are sort of the top ones. Now, for some of you listening, you might have been around crypto for a little while, so you might be, familiar with these. Maybe some of you listening are new to crypto, and you can, potentially see yourself falling into some of these traps. And we've all been there, right? And it's, it's the end of the world if you're falling into one of these. There's some great strategies to sort of rebound and re-strategize. But number one for me is I see a lot of people investing into a lot of altcoins, 40, 50, 70, 100 altcoins, right? And we spoke about this on the podcast the other day, gents, that, sometimes we can get really excited, right? We hear an altcoin, an influencer talks about it, a friend talks about it, we hear something in the paper, we hear something on a podcast, and we have to have money into it, right? Because we get that FOMO, and that's common mistake number two. We end up buying because our emotions get the better of us. We haven't done the research. We don't know what the token does. And we end up with a portfolio of so many altcoins that we have no idea what any of them does. We have no idea what any of them are trying to do. And we have no ability to stay on top of their roadmap. And this space, crypto moves so fast that we see that, a lot of these projects and tokens end up, not being able to deliver on their roadmap. And you can be aware of that if you have a limited amount in your portfolio. But if you've got too many to stay on top of, it can cause you to make poor decisions. And that's where we see portfolios tend to, end up in a pretty poor position because they've just gone too far.
Yeah, I would agree, Matt. And it's interesting. we were kind of joking at the start of the podcast about, this Pepe trending on Twitter, but that's like, it's a prime example of what we're talking about when it comes to FOMO investing.
Yeah.
People will look at Twitter, they'll click on a link, something is trending, 10 million trending on Twitter, and they're like, all right, well, what is this? And then they'll go on, they'll actually make an investment decision based on something like that. I mean, there was news getting around today. I can't remember where I read it, but it was basically they were talking about the amount of money that it came in for that particular token, like last night, just before the dip, and then every one of those people would have got absolutely wrecked, right? Yeah. So like it's almost like an instant. It's a bit of a short-term signal on the market as well, in my opinion. But it's like an instant lesson when you do these kind of things. It doesn't always play out like that for everybody, but I think it's a good example, and it's just kind of trending at the moment. So I thought it was worth mentioning.
Yeah, I like your point about the sources. I think the best sources are not to stick to just a few. Like, it is like aggregating them, getting a few voices in there, even if some are insane and some
diversification on your sources.
That's a good way to put it.
Yeah.
But yeah, like I know, like we called it out in the podcast. Like even when we were seeing the market fall apart, start a bear market, we were saying do an audit of like the people you've been listening to, what have they been saying, who's worth still following, and you can see now, like even if you weren't, following a few people and you probably checked in right now, there's quite a few that have gone silent. So, I mean, that's just hallmark of what you're sort of talking about there, Ben. I think it's pretty important.
Yeah, for sure. And that's sort of like really auditing that information is a great point, Pav, and understanding that this is the key point I want to really mention is understanding the incentives behind where that person or company or project is giving you that information. Why are they telling you that? Really think deeply. Why would they be telling you to buy this altcoin? Are they getting paid to promote it? Do they have a portion of, are they an owner of the company? Do they earn money by you buying that token, right? There's a lot of incentives that, are come from a place where it's not on your side. That's what I'm kind of getting at. And it's very common in this space. So really auditing that information. It's, again, the Swyftx Learn Hub is an amazing place where you can learn. Collective Shift, the reason we created it, because it's research backed, it's independent, there's no one being paid to promote things, it's purely information. So find the right sources, and it's going to give you a massive head start. The last couple of things I'll just touch on here is trading too much. See a lot of newcomers come into crypto and try and trade their way into profit really early. If you try and cut corners in crypto, most of the time you'll end up hurting yourself even more. Trading any markets is super difficult. Trading crypto is even more difficult. And if you're new to the space, I highly urge you just to make sure you're not investing more than you can willing to lose, and you're doing the education, doing the time, right? Because it's a difficult market, and there's a lot of very smart people on the other side of the market that you're trading against. Last couple here, so chasing high yields. So this is when tokens are offering really high APYs or staking or whatever it might be. Just be careful around again, how those yields are coming about. A lot of the tokens might be offering 15, 20% returns on their coin for you to stake that coin. But if you look at the token economics and you can see how the token supply works, they're actually printing a lot of tokens into the system. Unlike Bitcoin with a limited supply, a lot of these tokens are printing more tokens every day. So yes, you might be earning more, but they're printing more, right? Which is decreasing the value of the token. So something to be careful of. And the last one, easier said than done, but not exposed to the right sectors. So many people arrive into different trends too late. Crypto AI, perfect example.
Yeah.
By the time everyone is talking about crypto AI, it's too late. You need to be investing into sectors before they're being spoken about, right? You need to get into sectors that are going to increase in value and time in the future, right? So 2018 was a great time to be getting into Mana and Sandbox, right? Before Facebook renamed to Meta, right? Like that was the time to invest. By the time everyone's talking about it, it's usually too late. So that's another common mistake I see people make.
Just on the high yields point, Ben, I was going to touch on, like, a lot of people are interested in staking and hopefully they're engaging in that kind of themselves in a non-custodial way, which is what we kind of always recommend. And we talk about it a fair bit on our own podcast, Tapping Into Crypto. But I mean, the key piece here is just because a coin is giving you 50% APY, if the underlying token itself is decreasing by 99%, it's like having 50% of zero is still zero. So it's a bit of a joke, and we do joke about it a little bit, but it's really, people get lured by that that 50% sign or that 10% sign, or sometimes it can be like 500%, right? Some of these really obscure projects as they launch, but nine times out of 10 there is no value underneath it. So and it nearly always goes to zero. So
and it doesn't have to be staking too. Sometimes high yields is like we see it unfortunately from the inside. Sometimes people get sucked into companies that promise returns of X%, but then you put your money in once or twice, boom, third time you won't be able to touch it and you've lost everything. So it's scary to think if someone's offering you something that's just too good to be true, like you've really got to pull it apart yourself. Yeah.
I think since 2022, how it played out with the kind of high profile failures, you should almost treat everything as a scam until it's not, right? Like it's not always the way we want to look at the world, I guess. Like we're positive people. We want to think that there's good in a lot of what we do and people we interact with and everything. But you really have to be careful when it comes to finances. I think it's a different beast. So people have to stay woke there.
Yeah, spot on, gents. So we've gotten through the sort of first section. Thanks everyone for tuning in again. We're going to get to some Q&A soon. So if you keep firing your questions, we'll get to as many as we can at the end. The next section here we're going to dive into is some fundamental investing strategies. So there's really, a couple of different ways you can think about, investing into crypto. One of the ways that has worked in every financial market, not just crypto, but across the sort of the sector, is dollar cost average. And you've probably heard this before, DCA. Yep, thumbs up from Tommy. Yep. It is a boring but winning strategy, right? Especially for, a lot of you that maybe not having a lot of money to start out with. This is where I was 6 or 7 years ago. I was still living at home. I was sharing a bunk bed with my brother. I had no money, right? I was living sort of paycheck to paycheck, living at home. But I had so much conviction in Bitcoin and crypto that I wanted to get involved, and I just started putting in a little bit every week, right? 7 years on, the amount that has grown to just from compounding is phenomenal, right? And it's a strategy that you don't need to think about. It's automatic. It saves you time and energy. You can do this through Swyftx, for example. You can do this through a crypto exchange. You can also do it through automated other ways. We mentioned Bamboo before. Yep. I've used one called Get Paid in Bitcoin. You can do this through Swyftx. You can do it a range of different ways. The point is that setting this up is an automated way to build and compound that portfolio over time. And it's less stressful. It's automated. You don't have to think about it. And for me, gents, I'm not sure about you, but it's a way that it's a forced savings mechanism. Like some people, how they get a mortgage and they have to pay off their mortgage. It's a forced savings mechanism. For me, once it goes to my ledger, once I buy that Bitcoin or whatever that crypto is, I'm not touching it. It's a great way to build up the portfolio.
Yeah. Recurring orders. You mentioned, Ben, we do, the recurring order feature on Swyftx is is definitely my favorite, and I know a lot of people are getting really good value out of that. You mentioned Bamboo and get paid in Bitcoin. I think that was a really actually interesting story about you deciding to take 100% of your wages in Bitcoin a few years ago, and we kind of if people want to hear more about that, they can probably listen back to the episode on tapping into crypto that we did with Ben. But I thought that was it was a pretty ballsy move, but it's I guess it's proof of conviction for you and where you are and again, you've done the research, so you're confident and you have conviction across that asset class. I guess one thing I was going to say is you mentioned micro strategy as well. I mean, buying billions of dollars worth of Bitcoin for a number of years through this dollar cost average type strategy, right? They buy in bulk, they're buying bigger chunks, but they're still averaging into the market at different price points. It's pretty much the same thing. And we did cover it on the last podcast as well, that they had just essentially they had broken even, and they were now in the money with Bitcoin over 30 USD, which is amazing considering everything we've seen in the market from essentially 70k back down to 15k and then back to 30. So it proves that strategy is the best strategy over time, or is definitely one of the top strategies over time.
Yeah, totally, Tommy. And they were, as you said, underwater for a long time. And this chart, I think, really just sort of showcases how dollar cost averaging can really work versus the alternative, which is lump sum investing. So if we quickly talk about the other alternative, which is lump sum investing, it's where you take a big portion of cash and you deploy it in the market, right? Now that can be really good if you do have, some savings or some cash, or you've just got some dividends from your company, or, your mum's just giving you some money, or whatever that might be, right? You can definitely lump sum. And I've done that as well. I've lump sum invested in the market. It is a bit more risky because you're putting more capital at one time, and you're going to be subjective to the market. But let's say in mid-March, this would have been a year ago or two. 2021. If you invested near the top, right, and just started buying $10 of Bitcoin since near the top every day since the record high, you'd actually be in profit, right? And that's very, very the opposite. Very, very opposite. This is completely opposite of investing a lump sum at the top, right? If you put all your $10,000 or $5,000 at the top of the market and you have no more to invest, that's the price of the entry, right? You need the price to go above that to be in profit, right? But with dollar cost averaging, every single purchase averages out the average buy price. And that's where you can see that blue line, the average cost basis versus where the red price is. So dollar cost averaging, it's a boring but winning strategy, in my opinion.
I think just to play devil's advocate slightly on it, Ben, I love to argue with you every time we get you on, mate. So.
I love it, mate.
I think, again, totally agree with everything you've said around dollar cost averaging, but there are opportunities also for people to do these lump buys when certain opportunities do present themselves in market. So again, it comes back to the research, comes back to you identifying first what those key levels are and having a plan. Like you talk about plans, 100%. Ben, and have you guys talk about having an investing plan. Doesn't matter if it's crypto, if it's the housing market, equities. Having a plan is really what you need to have in place. And I think there are opportunities while you're DCAing, while you're dollar cost averaging into the market and out of the market to actually take advantage of some, key price points as well, potentially as we see market dips and things like that.
Yeah, totally agree, mate. Totally agree. And we get really in crypto, we get those really, as you mentioned, Tommy, if you have the strategy and you understand the entries where you think assets are undervalued, we go back to December last year. Most people were on Twitter and influencers were were sort of calling Bitcoin to head to 12,000 USD. This is when Bitcoin was 16,000. I'm not sure if we all remember. But really, if you looked at the fundamentals and we were looking at where we could value crypto, we severely felt that that space back then, Bitcoin anywhere under $20,000 was really undervalued. So we started buying really heavily around 16,000, was putting out to our members and saying, guys, I think this is a good undervalued time for Bitcoin. And little did we hold, 3 or 4 months later, we're up 80, 90%. And this is back to the point of ensuring that you're not listening to the crowd, because usually what everyone else is doing, if the majority are thinking one thing, it tends to be the opposite. And we spoke about that in depth in the podcast. You can probably jump in and listen to that in our last episode with Pav and Tommy. But look, the last thing I want to just touch on here is if we look at the Bitcoin and Ethereum chart, right, and we look at the ratios and we chart them up against a lot of the top altcoins, surprisingly, Bitcoin and Ethereum outperforms pretty much every single altcoin, right? So if we look at the top 10 cryptocurrencies by market cap at different stages over the last 4 years, you can see how a lot of these altcoins tend to not last too long in the top 10. And Bitcoin and Ethereum continues to tick up. I remember in 2018, I went to ETHCon in Sydney, where Vitalik was there speaking, and Ethereum was $80. Ethereum's now $2,000, right? It does the opposite. If you think about altcoins and where the all-time high price of altcoins are, they really are hurt on the way down in bear markets, right? So yes, you may make gains in those bull markets, but unless you have a plan and a strategy to take profits and you're riding them all the way down, you tend to get really, really hurt in the market. So it's important to have that strategy, especially in bull markets, to rotate your winning altcoins into whether it be Bitcoin, Ethereum, or cash, or whatever that might be, stable coins. Because if you run into a bull market, you don't have a plan, that's where things go, wrong pretty quickly.
Pav and I have covered that in a few podcasts before, Ben. I think we mentioned it in ours last week as well, of using certain altcoins as trading tools. Like, obviously, it's for the more advanced trader at this stage, but using those altcoins to acquire more of the assets that you have, conviction long term. So talk about Ethereum, talk about Bitcoin. But I guess the perception is that perception in market is that, it's too late to invest in Bitcoin. It's too late to, invest in Ethereum, which is, obviously we don't believe that's the case, but I think that still is the sentiment. And that's, that is the reason that the majority of people, as they come back into the market, they are looking for that, 10x, 20x.
Yeah, it's a
weird that that they've heard about. They've heard the old, heard the old wives' tales about everybody, doing a 10x or the taxi drivers. Yeah, that's right. Yeah. So they've heard all those stories. So yeah, it's definitely one. It's one that I think over time gets invalidated. And I think that slide that you had up there, Ben, that proves it.
Yeah, totally. And I definitely think that altcoins, play a role in a portfolio, right? Like, as I said, if you get into the right sectors early, you can really, you can, make good money, right? But it's also plays in the opposite sense. If you've got too many altcoins, you're speculating too much, it's borderline gambling, right? Probably is gambling, if you're really not knowing what the asset is and why it might, be solving a real world problem. And I think this next bull market, we're not going to see every single token rally and have 10, 50, 100x prices. The market's more sophisticated this time around. People are more educated. I think the value will accrue into, the top assets. And then I think 90 to 95% over the next 5 to 10 years are probably going to go close to zero, in my opinion. So it's important that you're really understanding those assets you're buying into. And this really sort of ties into where we are right now in the cycle. And this is the last section before we get into Q&A. So thanks for everyone sending your questions. Historically, and I believe the Bitcoin 4-year supercycle theory has maintained, if you look at every other theory that was out there in crypto, when bull markets come, when bear markets come, the 4-year supercycle has held up against every theory, right? And it happens time and time again. If we look at the annual returns of Bitcoin, and the reason we look at Bitcoin is because Bitcoin leads the market and everything follows. The annual returns in 2011, every 4 years, Bitcoin's compounding growth rate is somewhere between 80 and 100% every year. If you held Bitcoin for the last 10 years, you'd beat every single hedge fund on the planet. Right, it is the best performing asset class. But every 4 years, we have 1 year that we have a big retracement. We have that big flush out where weak hands are released, retail sell their crypto, and we had that refresh. And that refresh was last year, 2022, down 65%. And what have we had this year? Started 2023, Bitcoin's up 80, 90, 100%, like clockwork. Right, but we get too caught up in the weeds. We get too caught up in the day-to-day. Why is Bitcoin down overnight? Why is this doing that? What did Gary Gensler just say? What's Senator Warren just said? What's China just said? The reality is Bitcoin's done the same thing for the last 12 or 13 years. It's never had a day off. It's never been changed. It's never been broken. It's never been hacked. It continues to do the same thing day after day, regardless of what goes on in the market. So it's important when you're investing in crypto to take a step back and understand that these things run in cycles, and that just because we're down 10% overnight doesn't mean it's going to be down forever, right? And don't be emotional. That's the other thing sort of ties into this cycle chart.
Yeah, I think that's, like you said, it's been one of the only constants. I mean, there's a lot of theories about the crypto markets that run, but I guess this is one you can at least, go back in time and look at what's happened since 2015. 2022 was a tough year for a lot of us, a lot of people in the industry. lot of industries in general, not just crypto. You know, we're not isolated. But I guess our theory to date, and I'm hoping that you guys would agree, is that that tough year in 2022 hopefully was that one down year out of the 4-year cycle. And, you know, we've obviously started 2023 really, really positively. So yeah, I mean, it's the signs are good early on. We're gonna, you know, keep a level head and stay in the game. But at the end of the day, I think it's definitely shaping up to go in the direction that we expect at this time anyway.
Yeah, and a lot of the 4-year cycle, like just to retouch it, is around halvenings, the halvening of the Bitcoin cycle, like you mentioned, Ben, earlier. And, you know, I got a nice little stat that I'd like to share as well. Like in the same vein of what you're sort of saying there as well, like in 2015, the time it took from bottom to the halvening date was about 578 days, about that, give or take. 2019, about 550. We're less than 500 days from the next halvening cycle. So, you know, historically speaking, we could have very much well easily put in that bottom. And, you know, we've been in the worst economic macro conditions that we've been in, you know, for close to 20 years, if not longer. So, you know, the times have never been tougher, but Bitcoin's 4-year sort of cadence still seems to be playing out the same way it always has, as much as people want to discount it. So
I guess I'm actually going to just open with a question to you guys. Is like, is it directly linked? Is the 4-year cycle directly linked, in your opinion, to the Bitcoin halving?
Well, it's the king. Why not?
Yeah,
King Bitcoin.
What do you think about that, Ben?
Just repeat that again, Tommy. Sorry, it's just cut out for me then. What was that?
Yeah, I was just going to say, do you think that, you know, why have we got a 4-year cycle in Bitcoin? Is it directly tied to the halving?
Yeah, I think it's halving plus human psychology. I think people get bored really quickly, sell, and that idea, we all know it, when the bull market comes back and people go, oh wait, that's not dead. What's going on? The mainstream narrative come up with a limited supply. And when you get these major tie-ins with macroeconomic conditions, like what we're seeing in the US, money printing, COVID, there's a lot of things to tie in. I don't think it's just the halving, but definitely when things collide, like we're seeing right now, it's a good recipe for Bitcoin for sure.
One of the stats I had there was, you know, Bitcoin is as in those years down, Bitcoin has gone up as far as minus 80%, I believe, back in 2015.
Yeah.
We've seen minus 64% in 2022, which it seemed like the world was ending in crypto in 2022, but yet it's actually been the weakest decline in price that we've seen for a down year. So, you know, I mean, these are the kind of things that I think, not to make decisions around, but just to keep mindful of for as well.
Yeah, great points. The last thing I want to just touch on here around the growing institutional adoption. So we always talk about when are the institutions coming, when are they coming? That's going to be the saving grace. And like, I definitely think so. But the reality is a lot of it's still already here. So Fidelity is in the US, a major bank, right? A normal bank. They now offer Bitcoin and Ethereum to their clients. I've got a friend in the US that banks with Fidelity. You can buy Bitcoin and Ethereum inside the bank and insure it up to $250,000. That's like going into your Combank on your ANZ app and being able to buy Bitcoin and Ethereum. Right, that's massive.
Combank already flirted with it, didn't they? But they kind
with it, yeah.
They flirted with it, but wheeled it back or rolled it back again. But I think you definitely have to watch the space. I think they'll absolutely turn themselves into some sort of an exchange potentially, but definitely a house of custody for digital assets in future.
Totally agree. And the volumes just broadly around institutional trading volume, you know, we brought up MicroStrategy. When companies have so much cash on their balance sheet, they need a place where they can store it that's not going to lose the purchasing power. MicroStrategy has played this strategy so elegantly. Like, it's been perfect. They've rode the whole bear market, now back into the bull, average out their price, and they're moving their cash into an asset that they know they're going to get a hedge against inflation. And once other companies have the confidence to do that, we have the regulatory clarity that they're going to be safe by doing that. I think that's where we're going to get another really exciting sort of, change in the crypto sphere.
And I guess we're all talking at once. Just on that same point, VC capital funding. I know like everyone says the VCs are leaving. The VCs are actually more invested than ever as well. I know we talked about it too. Like even towards the end of 2022, that the peak level of funding is currently deployed. It's crazy.
Yeah.
Yeah, I've been reading a lot of stories about Ethereum post Shapella upgrade, and obviously the worry or the risk at the time was that all this Ethereum was going to get unstaked, and it was everyone was going to sell it. It really hasn't played out that way to date, so the market has kind of reacted the opposite to what a lot of people have expected, and I think that's going to be a key area of growth for institutions moving into that type of staking as a service, or even just businesses getting exposure to these assets and using it as a like I said, a protection of wealth, and a kind of a passive investment tool as well. So I think that's going to be an interesting one to watch in future.
Yeah, spot on. Awesome. We've sort of flown through as much as we can there. There's so many different, niches and topics and, different things to get into. If you haven't listened to Tapping Into Crypto's episode, I think it went out last week, Pav and Tommy, I think, or maybe this week.
This week. Yeah.
This week, yeah. Pav, Tommy and I sort of sat down and went a little bit deeper into some different fields. So I'd highly recommend checking that out. We're about to get into some questions. So thank you to everyone for sending in your questions. If we don't get through them all, we do apologize. We're very lucky to be able to work with Swyftx and offer users of Swyftx a 15-minute call with one of our teams. So you can head over to collectiveshift.io/Swyftx. If we don't get to your question, you can jump on a call with one of our team. We'll try and answer as many questions as you can over a call. But let's get into some of these. We've got some of the Swyftx team shooting through. There is a lot of questions, gents, so we might just fly through these. First of all, thanks to Jack Anthony Broad on Facebook, who had a little appreciation comment. Swyftx is the best exchange in Australia. Congrats on the partnership to all. Thank you. Thank you,
Thanks,
Jack.
Jackie. Good man.
Cool. There's some stuff around Swyftx here. Tom and Pav, I might let you answer that first.
David from YouTube, do I need to set up a wallet, or is the one I have on Swyftx safe? The one you have on Swyftx, David, is definitely safe. We've got a lot of people looking after the infrastructure on Swyftx, including myself. The recommendation or the industry best standard is to always set up your own private wallet, your own personal wallet. We do like the Ledger wallets. Trezor is another good one. You can also set up like a desktop or a mobile wallet. They're not the go-to specifically for us, but the likes of Exodus is one. There's a few other kind of software, as they call them, software wallets. But I guess the recommendation from us is personal key, private key ownership is the best industry best practice. Yep. So we definitely recommend that you can, if you can, set up your own wallet and kind of move assets between the exchange. Not just Swyftx. It's not a Swyftx issue. It's an industry wide issue. We all seen what happened with FTX, and we actually we prefer people to self custody where it's possible.
Yep. Yeah. Absolutely.
Yep. Great call. Lucky Star from YouTube, is central bank digital currency going to outlaw all the wild coins and replace them all? No, Lucky Star, in my opinion. So really, it's really important to understand that the central bank digital currency is not a cryptocurrency. It is a centralized currency that the banks are using for the benefit of faster transactions, faster payments. The technology is amazing, but we do need to really make sure, and everyone is understanding, that a central bank digital currency is not Bitcoin, it is not Ethereum, it is not a cryptocurrency. It has a lot of oversight. It's on a private blockchain, and the banks control that blockchain. It is not decentralized in any way, and I'm personally not a major fan of them. We've seen them being rolled out across the world. Australia started their pilot program. We don't know how the Australian CBDC is going to work, but it's important to note that it is definitely not a cryptocurrency and will not rival Bitcoin or most cryptocurrencies.
Mm-hmm. I've got one for you, Albert.
We've got Albert from YouTube. How do you manage risk? Ooh, it's a million ways to skin a cat, really.
Albert, if you listened to the bloody webinar, you would have known. No, but I mean, it's a loaded question.
Yeah.
I mean, even just touching back on David's question, setting up a personal wallet yourself.
That's a bit of risk.
That's risk, not holding all of your assets on the exchange.
Not a million altcoins.
Yeah, not a million altcoins, as we've kind of covered throughout the webinar. Doing your research is a way of managing risk, a very important way of managing your risk. And they're the main ones for me. What about you guys?
Yeah, I think the big one I always think about when I personally was, speaking to our clients here as well is like, if someone's up late thinking about their crypto portfolio, they've probably got a bit too much in. So you're not managing your risk if you're worried that much about what you've got in there. So like that's a very quick litmus test right there. And also just having, I guess, invalidation points for why you're in something, I guess. Like, if you have got an idea of why you're getting into something, if it's long-term, have a long-term plan. Don't react off the more shorter term noise, but vice versa. If you're in for something because you think it could do something in the short term, you need to be reactionary in the short term as well. So that's, I guess, my two little bits.
Yeah, for me, I don't trade, so I'm just a long only portfolio. But it's just really having conviction in the assets that I own, so I know that I'm not having risky investment. You can have risky investments, but you want to make sure that you're allocating it to your portfolio on a in your macro portfolio that you're not overexposing yourself to a super risky asset, right? So whether it's having a smaller percentage or having less altcoins, and having that conviction. So being able to look at some research and really understand what you're buying, I think that can mitigate that risk.
Yeah, absolutely. We've got Tim Bosch from YouTube. He says, how would you persuade a commodities trader to lean over to crypto? Pav, I know this one. You'd love this one.
It'd be the whole reason, I guess, why you trade commodities. Is there enough of the reason why you trade that to do it in crypto? Really, at the end of the day, like there's not really anything different there. You obviously have a reason to be trading. You see, you have an edge. You've measured it, back tested it. Hopefully, it's profitable. So you'd see if the same thing would work in crypto. So the same thing you might sort of do is, so many cryptocurrencies too. Like as I do like to trade myself. So things might work on Bitcoin, but they may not work on an altcoin, for example. So it really comes down to spending the time doing your due diligence again, like we're talking about already. Risk is definitely the flavor here. Seeing if that translates across, and quite often they do, because most traders that are profitable, it's more risk management again, like knowing how much you're going to lose as opposed to worrying about how much you can make. Like that usually is the key takeaway. So it is those people that I guess I do speak to that have come over from commodity stocks, the key takeaway is it is faster paced just because it is more lower caps that you're working with. So that's just something, I guess, to take away from that question. Hopefully it's helpful.
Yeah, I think we got to give a special shout out as well to one of the people tuning in, Streetwise Romeo. Thanks, mate, for your comments. It's been awesome. Gina said it's been awesome interacting with you throughout the webinar, and you said yes, Swyftx always provide great customer service. Thank you. So that is good. You can blame Pav for a lot of that. He's the man in charge of most of our customer service and experience. So good on you, Pav. A little pat in the back for you there, mate, as we keep going.
Appreciate it.
Yeah.
Got one here from Murdo Ross from YouTube. To that point, though, are there reliable metrics to help make an informed investment decision? Really good question, Murdo. So, look, I'm going to plug Collective Shift here. So, for a lot of us, trying to do our own research is actually really hard, right? There's a lot of terminology, white papers, there's videos, there's token economics, there's utility, there's so much that goes on with like researching a token, right? So we've actually recently launched, and we've soft launched it. We haven't publicly announced it yet, but we've got a reviewed altcoins list in the Collective Shift platform where you can go deeper into specific altcoins, where we give you the good and the bad of a token in simple language. We give you how it creates value, what it does, the problem it's solving, but not just on the good case, but also the downside case. And then we can give you sort of our opinion on that. So really, again, the mission for us at Collective Shift is helping people do better research so you can be more confident with your investing. So when you're trading and you're investing in your portfolio, you're lowering your risk. You're more confident. You can sleep well at night knowing that you're actually listening from sort of quality research backed insights. And there's a lot of metrics we use, whether it be on-chain metrics, whether it be some fundamental valuation stuff, whether it be sentiment, technical analysis, sentiment. We use a lot of different things to analyze a token. But if you're wanting to learn a little bit more, I'd highly recommend checking out Collective Shift, because it can be a good way to help.
Yeah, we had a question in actually from Peter Wilson from Facebook, and he was pretty much looking for that, Ben. So yeah, Peter, if you're still on, mate, I reckon go and check out Collective Shift's website, have have a sconce around the free content initially. If you're a Swyftx customer as well, there's some additional kind of insights and research you can get access to, which is pretty cool. We had a bit of a fun question come through. I did want to highlight from a user called lol. Presume that's lots of laughs by two. What is the Swyftx user count at the moment? Do we have 1 million members yet? Not quite yet. We don't have 1 million yet, but we are not too far away from it. I see a few of our backroom team looking at us here, sending us winks. But yeah, I guess, guys, if you like Swyftx, if you like the experience, share it with your friends, refer your friends, use the affiliate program. We've got all these things kind of set up, so that's a pretty fun one to kind of sign off on.
I'll do anything to get more cake.
Pav will do anything to get more cake.
That means we get a cake. Let's do it.
Yeah, and apparently we've got a response saying I love you for the response. So yeah, we love you too. Thank you very much for that. I do want to give, before we close, one last shout out to Ben himself. Ben, thanks very much for giving us your time this evening, jumping on, leading most of this webinar. You're a gunmate. So, and I also want to give you early congratulations for being nominated Emerging FinTech Leader in the Finnies FinTech Awards this year. So good on you, mate. We'll be there on the night cheering you on, and yeah, hopefully you can take out the win, mate.
Thanks, Tommy. I'm not coming up against you, am I? Because I'm dead in the water if you're involved.
No, you have to be able to. People have to be able to understand English for to be able to win, mate. So I don't win any marks in that category.
No, thanks very much, and really appreciate the partnership we have between us. I really love the ethos and sort of focus you and all the team at Swyftx have on education and research, because it's really important that we see all of our members and people in the Australian community really winning crypto. We're punching above our weight, and it's a really exciting time to be in crypto. So yeah, if anyone wants some more insights, hearing our latest strategies and what we're seeing in the markets, we do have this really cool thing. We can jump on a 15-minute call with myself or one of the team. You can have that link there. And we've helped a bunch of Swyftx customers, actually, as Pav and Tommy would know, and the feedback's been really good. So
yeah, it's really good.
15-minute, no questions asked sort of value session there. So head over there. But thanks, everyone, for tuning in. Have a great evening. And hopefully we'll do this again, team.
Yeah. Awesome. Yeah, absolutely. Thanks, Ben. Thanks, everybody, for tuning in. We'll see you on the podcast.
Thank you so much.